Hello friends, today I want to talk to you about what's going on in the economy and how that impacts the housing market. Certainly there's lots of conversation, and rightfully so, around tariffs and uncertainty and stock market volatility and interest rates. And I want to translate to you as a real estate professional. This video really is for real estate professionals, although if you're a consumer and you're watching this content, this will be very useful for you as well. But I've found in my experience being a broker and a coach of real estate agents is that in many instances, agents are unable to explain to the consumer what it all means to them, right? Most people know what's happening. Some people understand what's happening, but great agents can explain what's happening. And I want to help you do exactly that. It's something that I do for my agents. And so if you're watching this video, it'll be worth the 10 to 12 minutes of your time to make sure that you're educated in very simple terms on how to communicate to your customers about what's going on in the economy and how that translates to consumer confidence and the housing market. Okay, so tariffs. What is a tariff? Well, tariff is essentially a tax on imported goods that could raise the cost to the consumer. So when it comes to housing, for example, it could be building materials, appliances, steel, lumber, those kinds of things, which is going to increase costs for the builders and then increase costs for the consumers. We've also got, global disruption, supply chain, wars in Central Europe. Those kinds of things are also going to have an effect or cause uncertainty. And then we see businesses potentially, I'm not an economist, let me just state that here. I do not have a crystal ball. I'm not giving anyone any absolutes about what's exactly going to happen. But, given that we're in the business every single day, talking to consumers and helping agents be on point to help consumers, we do have direct field level experience of what's happening, which is right now a total drop in demand, right? Consumers, when there's uncertainty, they don't make big purchases. Businesses are uncertain, and so they cut back on spending and investing. There's concerns about unemployment. And so then the consumer says, put the brakes on, I don't know what's happening, and I'm not going to make any major decisions, which makes a lot of sense. You've got stock market volatility, and then what translates is investors will, if the stock market's volatile, if you don't know how to forecast whether a company is going to be a good investment or not, investors will take their money out of stocks and they will move to treasuries. Treasuries have tended to be a safer, more stable investment, albeit with a diminished or reduced yield over what you could get in equities. And then the more demand for the treasury, the price goes up, and inversely the yield goes down, which has a lot to do with mortgage interest rates. They track in alignment. Federal Reserve, which is a large player in the space, what they do is they then adjust mortgage interest rates to offset either a slowing economy, inflation drops, and so the Federal Reserve will cut the borrowing rate, and so rates will come down, which will stimulate investment and growth and activity. Conversely, if the economy is too hot, which we saw in 2022 and 23, the Federal Reserve will raise borrowing interest rates, which of course then makes it more expensive to borrow, to slow the pace of growth, to slow investment down so that inflation doesn't become out of control. And what we've seen is inflation has been relatively stable for about the last year at around 3%. The Fed's target rate is 2%. We're not that far off at 3%, much better than where we were compared to 22 and 23, upwards of 6, 7, 8, 9% for, some periods of time. So inflation has been relatively under control and stable, but the concern now is with tariffs, which is, this is not a political conversation either here. I don't have a point of view either way. This is an educational video, but certainly there does appear to be a tariff conversation happening between the United States and other countries, China in particular, and that could lead to an increase in the cost of goods and services, which means that which could lead to inflation, things costing more. And so now we've got this period of, well, should the Fed lower rates, even though prices may be on the rise? And so that uncertainty and just don't know what to do means people hold back, they wait. As far as interest rates go, we've actually seen a relatively stable interest rate environment over the last 12 months, I would say, anywhere from 6 to 7%. We have seen at periods of time we peak over 7% in the October 2023, we saw rates go as high as 8%. Then we saw rates come back down under 6%. for all intents and purposes, we expect rates to hover in the mid sixes, we'll say, for the balance of this year. And there could be rate cuts, but again, it depends on inflation and rising costs of goods. Some would say there could be as little as 2 rate cuts, maybe as many as 4 rate cuts. We'll find out, right? The reason I'm sharing this conversation with you, real estate agents and consumers, if you're watching, is if you got to be able to explain the relationship of all these things to your customers. Of course, some people are in tune, they understand all of these factors, but a lot of people don't. And of course, we know headlines are not meant to clarify, they're meant to terrify. I've heard that through one of the media outlets that I watch, Keeping Current Matters. Shout out to you guys for doing a great job. That's exactly right. If we're following headlines, we may not be following down the informed and educated and empowered path. And as real estate agents, your job is to make sure that's exactly what you're doing with your customers. Okay, so if interest rates have either been on the rise or stable where they are in the mid sixes, the other factors we've got is affordability, which is one of the biggest problems we've experienced over the last 24 to 36 months. Is housing is expensive. And here in our market, South Florida, Miami-Dade, Broward, Palm Beach County, we've seen an increase in insurance rates. We've seen an increase in real estate taxes. We've seen an increase in HOA costs. And so all of that means you combine that with the interest rate environment and home values, which have skyrocketed from 2020, 21 peak demand period. Home prices have remained relatively stable with some minor increases. We're actually even expecting home values perhaps maybe to stay stable. Some markets decreased. A lot of markets in Florida have been decreasing. Other markets in the Northeast are still increasing. So you've got housing affordability issues, you've got consumer confidence issues, you've got uncertainty in the market issues. And so what does it mean? It means buyers hold. Right? There has been a dramatic reduction in buyer demand, which means that people are just sitting on the sidelines waiting it out. And not just for houses, all kind of major investments and purchases. And if you're a company, right, do I invest to grow? Do I hire more people? Or do I need to do the opposite, which is start spending less, start maybe even laying off people, which from an unemployment standpoint could be a major triggering event for lowering interest rates, which is going to be hard to do if prices are on the rise. From an unemployment standpoint, we've also been in historically very low unemployment rates for the last 5 years, really. Since the pandemic and post-pandemic, we've seen a very stable around 4% unemployment rate here in the United States, which is very low, which is very manageable from an employer-employee standpoint and a general measure of the health of an economy. So we've been in a very healthy environment in that regard. But when buyer demand slows, and of course we have the same or more inventory of housing coming on, that means that prices are going to come down. And we are seeing that in certain price points and in certain pockets of our market here in South Florida. So what does all of this mean? It means that as real estate professionals, we have to be able to communicate confidently to our consumers about these factors, help them understand the relationship of what all of these things mean. I know I'm going through this pretty quickly here, and so you might want to rewatch this video again. I am shooting this on April 24th here, 2025. So it is time sensitive here today, but these overall economic factors will apply at all times. Of course, this is a very time sensitive and kind of in the moment for the current environment we're in today. But you may want to watch this again and walk back through and understand what all these variables mean. But as an agent, if you're advising a buyer or a seller on what to do, now it's very relevant to understand how all these macro factors affect housing prices, buyer demand, inventory that's on the market. If you're a home seller, the key here is you've got to position your property properly for the buyer who needs to transact and doesn't just want to transact. Some buyers today are choosing to rent instead of buy, which could make a lot of sense, as certainly I'm not here to advocate that one is better than the other. It also depends on your unique set of circumstances or the buyer and seller's unique set of circumstances. Of course, there's a longer term conversation there where missed opportunities of renting for a year, locking yourself into a 12-month lease could actually lead to missing the opportunity there where there's more inventory, less demand, demand, because if rates do come down, if prices do come down, well, then there could be more demand, right? An increase in demand, and then there's more competition. And so it's just very important to understand all these variables and factors as a real estate professional, as you're communicating to your marketplace and your consumers. Watch this video again if you'd like. If you want to reach out to me for any conversation on how understanding these variables could be more useful to you as a real estate professional, be happy to connect with you, or put some comments here in the video and we can respond to them there. If you're a consumer and you happen to be watching this content, reach out to your trusted professional. Very important to work with someone who's educated and knowledgeable and can help you guide the decision-making process when it comes to buying and selling. Okay, thanks for watching. Hope this was helpful. More to come.